All right, guys, we'll get started here. It's a minute past the top of the hour. Just wanted to introduce myself. My name is John Jimenard, Regional Vice President of Sales for the great state of Florida. And I've got two of our top producing account executives with us. We tried to try a different format. You know, we do our pretty formal webinars that are driven by, you know, the products and the programs that we have. But we decided to try this today to let you, the participants, really drive the conversation and drive, you know, the narrative and the questions and everything else like that. So with us, I've got Carlos Betancourt. Carlos, please introduce yourself.
Good morning, everybody.
And also Scott Gruebele.
Good morning, everybody. Welcome to the first ever Coffee with Closers.
Yay, thank you, Scott.
Nice smile. Nice smile.
So, guys, we're going to keep this really casual. It's going to be driven by, you know, your questions. So, and the questions can be from, you know, what you want to market to, you know, how you market yourself to programs about bank statements or programs about things we've just introduced, you know, or enhancements we've just rolled out. So, this is really going to be driven by you guys. We thank you all for joining us. You've allocated 30 minutes and, you know, really wanted to bring the expertise and experience that both Scott and Carlos have to you to answer those questions sometimes that maybe on the larger webinar scale you don't get to ask. So for any of you, you know, just raise your hand in the queue here and we'll unmute you to ask a question. So in the meantime, Scotty has a question. So in the meantime, Scott, I'll throw it back to you and Carlos on some of the things maybe you're seeing in your market or, you know, what's going on with you guys today and, you know, with recent enhancements that we've rolled out. Carlos and Scott, any of you guys want to take it and run with it from there?
Yeah, actually, like I said, I got my thank you to my brokers that's sending me text. First question live. So it reads, hey, Carlos, is Scott really a Jets fan? How does he feel about Aaron Rodgers' performance last season? And have you had him?
You got muted, Carlos. You got muted. See that?
The first 5 minutes you got muted, Carlos.
The powers that be muted.
All right. Now you're unmuted, Carlos.
All right, I'm done. That's all I have. That's all I have.
It was the greatest 4 plays I've ever seen in my life.
That's it. That's all I got. That's all I got.
That's actually a great way to open it up because, you know, for everybody that joined us on the call, really the idea, like as John mentioned, was to have a little more informal conversation with a couple of account executives and our originators, right? We do our national webinars. They're a little bit more formal. There's a big audience. This was more catered to maybe a smaller local audience. All of my originators and Carlos originators were invited on here. And it was just a chance for Carlos and John and I to kind of talk shop, give an idea of what's going on out there in the market today. What are we seeing? What are some trends? And then, you know, thankfully, we're doing it at a good time because we just rolled out a whole bunch of new enhancements that we're trying to spread the word on. So I guess whoever's on this call is going to be able to kind of get some details on those enhancements before anybody else, first to the market. So yeah. I think that's the timing was perfect for this.
Yeah, Scotty. And, you know, one of the most recent enhancements was, and we're in a big, you know, investor state of Florida, was 6% seller concessions.
Yeah, that's a big one. That's a 6% seller concessions on investment properties. So yeah, I mean, and that's one that really, you know, I've gotten a lot of questions on from my originators. You know, would we ever increase that concession? And it's really big, especially in today's market with prices where they are, especially in the South Florida market and rates where they are, to get that little bit of extra help from the seller side on an investment property and be able to go to the 6% concession is big because, you know, a lot of times investors are kind of tight with their down payment, closing costs, et cetera. And then to kind of add on to that, John, we rolled out, and Carlos, I'm sure this has been helping you a lot, because I know I hear it all the time, is we rolled out allowing gift funds on investment properties about a month ago, right? How big has that been, Carlos, with some of your conversations?
Yeah, it's been great, and it's a great way to start because I just kind of wrote a little note here because I did get messages from my brokers, and a lot of my brokers that are working with developers, and Scotty, you know this, that we've always heard, hey, the incentives that these developers are giving out usually exceed the 3% for investment. So what do we do with the difference? They're going to do this and that, lose credit, and they're like, well, here's your solution. You're up to 6%, and like you said, and you can get a gift on your investment property. Your mom, dad, any close family member can kind of participate in that because we get a lot of that. Like, my parents want to give me a gift. We're doing well. They want to. It's like a family thing. Obviously, in our community down here, the family's always involved in every decision. So, as you guys know, so I think it's a cool like 1-2 punch with the seller concessions and the gifts on investments. It's really, there you go. It's really helped our business, and it's going to help obviously all your people's, my broker's business.
Yeah. So little backstory on that, and probably a little tip for the LOs on here is that, so one of my top producing LOs, he's actually one of the top producing LOs in all of Florida. Won't say his name, but if you go on, check him out on Modex, he has huge numbers, but a lot of his business is new construction. And I had lost a lot of his business because he had to use a lender that would offer the 6% seller concession on investment properties on that new construction. So now I had a great conversation with him the other day, and I'm his preferred lender of choice. So he says he's going to start directing all that stuff over to us. So that's a huge change. And then the gifts, the fact that we're doing gifts on investment properties, he even know that. And he said that he doesn't really have any lenders that offer that either. So those are two really big tips that I think, are good conversation pieces for an LO to have with realtors, right? It's a good conversation starter, or even if you wanted to do a presentation with your realtors and kind of lead in with investment properties and new updates to investment properties. I think that's all pretty good stuff.
Scott, to add the new construction tip, one thing that we do that a lot of lenders don't do is that final inspection when you have a new construction, right? The 1004D. A lot of lenders require that inspection before you get your clear to close. We're okay to move that typically over to a closing condition, right? So don't wait until don't fear that you have to wait till the last minute and it's not in yet. I have to wait for the appraiser. That's fine. As long as you get a CO or technically a TCO, we can move that to a closing condition. So that's another little thing that we have.
Did you steal your kids' lunch again? Is that their lunch box?
It is. It's a PB&J.
You got your sippy cup?
Trying to eat healthy like you, dude. You eat like kale. He's like on a 15-hour water diet, but it's expensive. I can't.
Catholics, convicts.
Yeah. Oh wow. Yes.
Hey, Scotty, you need a bigger bag if that was for all his kids. Scotty, so.
This is true.
I got 5. I only got 5. I think I'm done at 5. I'm done. I think I'm done. Yeah.
So one of the other enhancements that's been really cool that I actually just spoke to an originator a little while ago about is the rent-free option, because for forever any originator on here knows, if you've worked with Angel, we've always required you to show us proof of payments for rent history on a primary. So if you had a first-time home buyer that was living at home with mom and dad, or maybe they were paying rent but they were paying cash, right? We in the past couldn't really do that loan because we always wanted to see either a transaction history printout or a bank statement printout, or even the canceled check showing that borrower was paying rent. Not anymore. We have now rolled out a rent-free option for borrowers on the bank statement program, which is where we see it the most, where with 80% LTV, 20% down, we can simply just take a rent-free letter. I live at home with mom and dad, haven't been paying any rent, or I rent but not able to verify the proof of payments on the rent. That's a big one in the marketplace, because over the years here, that's been a guideline that we've been trying to kind of get enhanced for a while. So I really think that one will provide a lot of value to the originators on this call, and I definitely want to make sure everybody makes a note of that. That's one that I think will really help. Have you seen any coming in on that, Carlos?
Yeah, no, You said it perfectly, right? A lot of investors want that. They want to see what the person pays. They're worried about payment shock. So I think once you get to our level, we've been able to expand those guidelines because I kind of say it in, kind of bragging, but not bragging. We really do good quality loans. We got really good borrowers. So we have that ability in the market to take a little bit more risk because we know what we're doing. We're really vetting these buyers. So we could take a chance on a first-time buyer with no rent and all that stuff. We have the track record. So, yeah, I think it's a great benefit. Agreed.
Yeah, and you and Scotty won't say this, Carlos, but combined, I mean, you guys have a boatload of experience here at Angel Oak and know what kind of loans are going to get closed. Carlos is going on 10 years, Scotty 8. That means a lot, especially in your market when you're in a tight inventory market like you guys look like we're all in, and knowing the quality of the pre-qual and the AE is significant. I mean, it's. But I do want to do one thing here. Make sure I know some people have jumped in after we started the call. This call is really going to be driven by you, the participants. We really want to make sure. Like I said, we have Scott, we have Carlos. Two of the best AEs in not just the non-QM business, but the entire business. You have them and their brains at your disposal here. So, just raise your hand. I'll unmute you and feel free to ask a question or type a question in the chat. So we want to make sure this is all about you guys today. I know Carlos and Scott will go at it a little bit, but it's really about you guys and helping you guys close more business. And that's really what 2024. We all licked our wounds in 2023. It's time to get out of that mode, the woe is me mode. It's time to drive your business in 2024.
Yeah, so I mean that might be a good segue to kind of let's kind of throw around a little bit about what we're seeing right so far. So we're midway through February. January coming out of the holidays was really slow. I talked to both Carlos and John offline where I was like, it was a week or two there. I was like, oh my God, there's like no calls coming in, no emails. We start to freak out, right? But then after the second week, it picked up. And then by the end of January and so far these first 2 weeks of February, I've seen a ton of activity, a lot of phone calls, a lot of pre-qual requests, a lot of scenario requests. So I think we're starting to see the market kick in. I don't know, we've had how many rate reductions, John, Carlos, since basically the start of the year?
About at least a half a dozen, Scotty. Your point about activity, last week was our largest pre-qual week of the year so far.
Yeah, I know, and I'm having to constantly update them because every time I see a rate reduction, I'm like, shoot, I got to go back and update all these pre-quals, right, and get accurate pricing out there. Actually, side note to anybody on this call, if you have a pre-approval with us or if you priced anything with us, keep checking it on a daily basis until that turns into a loan because pricing is coming down. We are seeing it almost on a daily basis. Now, it's not always across the board, right? One day it might be on the bank statement program. The next day it might be on the DSCR program. But we are seeing those improvements and kind of circling back to how it started is that I think that's what's driving a lot of the interest is people are seeing, all the talk about the Fed eventually getting to the point of reducing. People are seeing inflation cooling. And I think we're starting to see those buyers come out of the woodwork a little bit. There's been, all types of estimates thrown out there by the MBA and whatnot of what the projections of originations are going to be for the industry. But I think the one thing nobody can predict, man, is how many buyers have been sitting on the sidelines, like just waiting, nobody can predict that. Nobody knows because things slow down so quickly, but just how many buyers are there out there sitting on the sidelines, waiting to jump back in when pricing gets to, I don't know, 6s, 7s. So it's going to be an interesting year. I personally think, and I'll kick it to you guys. Let me know what you guys think. But I personally think we're going to beat projections in the industry, I think, across the board. I'm a little more on the optimistic side. I think as we see pricing come down, we're going to start to see a lot more buyers come into the marketplace than we expected. And as we all know in Florida, there's still an inventory issue.
Yeah, so Scotty, you touched on a couple points. The MBA for 2024 is projecting just under 2.3 trillion, which is a 21% increase over last year of about 1.9 trillion. So I think, we mentioned it a little earlier, let's go out there and get that business. So Carlos, let's, one of the other enhancements we rolled out last week was using the air DNA on invested property. So talk a little bit. I know it's fairly new, so bear with us here a little bit, but I think that's going to help us close some more loans.
Yeah, I think that it's a tool that a lot of people, I think, is very underused. A lot of people just either don't know about it or just don't use it. So when we're trying to do not us, the appraisers, trying to target that market rent, short term, long term, especially short term, right? They have a lot of difficulty in doing that. Now, I was talking to an appraiser a couple of months ago, and he's like, look, there is no Fannie Mae form for short term rentals. So I was like, so it's not supposed to do that. It's a phenomenon that's happened after COVID, right? Or a little bit before and all that, this short term Airbnb, everybody's an investor short term. So we've had to adapt to that. So there's a lot of different AMCs, a lot of different appraisers that kind of see it differently, and depending on the market. Well, I like this and I like that. And I think using that, and I want to thank our team, the Angel Oak team, for bringing that into the mix as a way to really determine what the true market rental value is of that neighborhood. Maybe comps are a little outdated because most of the rentals are done, privately, or they're just not, they're delayed, something that there's obscures it. But and I know, because if we travel to Florida Keys, right, you can't get a rental there for less than a lot of money a week, right, or a night. So, but if you look at the comps, you're like, well, there's no rental activity here. But you see the entire, community or the whole building is jam-packed. And you're trying to rent there, and you're paying $3,000 a week with friends. So I think using that tool is going to open up a massive amount of opportunity, and it's going to streamline it for us. So we don't have to take so much time with the back and forth with the appraiser. So I love it.
Yeah, that's a great example, Carlos. The Keys is a perfect example, actually, because how many times have we seen a DSCR come in down in the Keys, and the long-term rent is just not going to be enough to cover the DSCR. We know that, right? But man, if any of us that live down here have ever tried to rent a place down in the Keys for the weekend, we know just how much they're getting per night, right? So on a short-term rental, on an Airbnb or a VRBO. So that's a perfect example. And to kind of take a step back, macro level for everybody. So as everybody knows, on the DSCR, we allow interest only to be used to calculate the DSCR. At 75 LTV, we can let the DSCR go down to a 0.80, or at 30% down, 70 LTV, you could waive the DSCR altogether, right? But there's a lot of properties that do VRBO, they do short-term rentals, or the buyer is buying the property with the intent to do short-term rentals. And as Carlos mentioned, all of us on this call probably had a hard time getting the appraiser to use short-term rental comps on the 1007. So AirDNA is beautiful because this is a service that we can just log on to, and we're going to pull up the property address, and we're basically looking for two things: the occupancy rate to be 65% or greater in the area, which is a very modest number, and then the market score to be greater than 70%. So when you pull up the AirDNA report and you punch in the address, it gives you all of that data. And once we have that data, it tells us what the average nightly rent is for a short-term rental on that property. And that's the number we're going to use to calculate your DSCR. So this is huge because in that example with a property in the Keys, that could be the difference between doing an 80% LTV or doing a 70% LTV or 75% LTV on that property for a buyer that might be buying, a property that's $1 million, $1.5 million loan amount. So we think that's going to be really, really big. I think that's going to help save a lot of loans. And then obviously you have all your short-term rental areas as well out there, up and down the coast, where we can apply this as well. So yeah, that was another enhancement that I think will really add value for originators. Man, that DSCR program is just, the evolution is crazy, right? So gifts, 6% seller concession, AirDNA, DSCR waiver. I mean, man, these are all changes we've made in the last 6 months?
Yeah, I don't think a lot of people know that we have that no DSCR option. I know a lot of lenders, once you go below 1, that's it. You got a dead deal. We, bringing up the Keys, I closed a deal in the Keys for about $2 million, and the rent came back at about $6,800 a month.
Yep.
But the mortgage payment was like $13,500, and I was like, oh my God.
That's what I'm saying.
Brought it down to no DSCR, got the deal done, and the owner was like, my broker was like, hey, this guy has 4 rental properties down there, massive cash flow. He knows DSCR better than you and I combined. I'm like, excellent. And one thing about AirDNA, Scott, that you were saying, we don't give a haircut on the value of AirDNA, right? Because some other investors will chop, 25% or something?
Yep.
I was reading that.
75%. Yeah, we're using 100%.
100%.
100% of whatever the nightly rental income amount is. Obviously, we multiply that over the course of the month, and that's how we come up with our number. We don't give it a haircut, whereas really most lenders that use AirDNA do.
Right.
Yeah. So guys, Luther, I don't know if that answered your question regarding short-term rentals and some condotels. I don't know if you guys want to touch a little bit on condotels.
Oh, we had a question? Nice.
Yes. Thank you, Luther, for being here, 1, and then 2, for asking the question. So, yeah, it's just about, short-term rentals, which you guys talked a little bit about using AirDNA right now, and then maybe touch a little bit on what you guys are seeing about condotels.
Yeah, I'll jump in on this one on the short-term rentals. I think for us, I think you kind of said it maybe a few minutes ago that market knowledge is important, right? And when we're analyzing a condo hotel, not all of them work. So there's specific guidelines as to what we're looking for. We don't want it to be too small, like a 300 square foot unit. But one of the things, kind of like, this may not answer the condo hotel question, but it goes back to what, John, you said earlier, and we always harp on, is that we're seeing that a lot of everybody does non-QM lending now, right? When I started in, 2014, and Scotty right there, we were at trade shows. Nobody did non-QM. It was us and maybe 1 or 2 people. And now everybody is a non-QM expert. So again, I kind of try to chuckle, but I know the difficulty that my LOs go through, because they get 1,000 calls a week about this program and that program. And I always ask, hey, check your AE and find out how long they've been with that lender, right? They're probably on their 4th job in the last year and a half. Are you sure you want to trust them with that deal? It's not even the deal. You want to trust them with that relationship with the realtor relationship, right? This realtor sends you a ton of business, and you're gonna go to some random investor for that tough loan. That person hasn't been there often, many months. They're just gonna throw it up against the wall. They don't know their guides. That's a disaster. That's a recipe for disaster in so many ways. So I always encourage them. It's important to work with reps, humble opinion, that kind of know the business and know the program, that know the market. And one more thing, I know when we were at the trade show, 2 weeks ago down in Miami, one of the brokers said, I try to use these other investors that they're just like, or lenders, that they're like, well, technology, we can do everything for you. Just give us the bank statements. We'll calculate bank statements. So what's happening is you're sending all this information up, and you have a pre-processor, pre-underwriter reviewing it. The deal doesn't work because it needs to be restructured or structured. And the loan officer at the presentation said it perfectly. She goes, well, the realtor, the underwriter says, once I see it, I can't unsee it. So now it's too late. I can't structure the deal. And that's something that Scott does an amazing job of, and myself, of making sure the deal works before it moves forward. So you have a yes or a I can't do it right now. So again, I know this wasn't a condo hotel answer, but I just kind of wanted to harp on that again, because I did see my brokers really are texting me, and they're telling me, hey, what about this? So they wanted to talk about that.
I used to be Brown until I started working with Carlos.
And by the way, John, you've never been down to the Keys. We're talking about the Keys. You've never been down there, dude.
It must be in the mail. It must be in the mail.
I had nothing to do with the changing of that hair, John. You know that.
I know you haven't. Carlos has.
Anyway, sorry about that. I just had to share that.
Good questions. And again, guys, I know we allocated another 5 minutes here. So, Scott, and if you have a question, great, ask it, But Scott and Carlos, you guys are great at this. And we talk about how do you differentiate not only yourselves from other AEs in the marketplace, but how do you help your LOs differentiate themselves from all the realtors out there, right? How do we talked about, I know both of you guys run it and do those realtor presentations and do a great job on behalf of your LOs, but I still believe that is one of the most powerful presentations out there right now to differentiate yourself.
Yeah, it is. It's that I would say it's through the presentations where we can really help you guys differentiate yourself in the sense that we have a PowerPoint presentation that we offer. Angel Oak offers. It's free to any approved originator with Angel Oak. You can access it on our portal, and you guys can literally take this PowerPoint deck and 100% customize it with your logo, your name, your contact information. We even let you change the data or get rid of slides if you don't like it. The idea is to give you a base, a foundation of a deck to use to present non-QM products and programs. Now, here's the thing, guys. We have found, and 100%, and I can tell you firsthand, that non-QM products and programs, and you guys know this, they pique people's interest. You can fill up a room of realtors telling them you're going to talk about simply non-mortgable condos, alternative loans for self-employed borrowers, and DSCR options for your investors. Like, you'll pack a room with realtors for that. Obviously, you're still going to talk to them about your Fannie Freddie products, your down payment assistance, and everything else, right? You're going to slide that in. But the point is, get them in the room using this, and then you have the audience to present whatever you want. But John, do you have? So I have an account. I have an account, and they gave me permission to use this and show everybody. Premier Lending, good friends of mine. I've been doing business with them for a long time. They took our PowerPoint presentation, they customized it 100%, and they shared it with all of the LOs within the company. And now every one of those LOs just simply goes out and schedules presentations with their realtors. I can't tell you how many presentations I've gone on with their LOs, and I'm talking packed. 30 realtors in a room. I see Vanjie on this call. We did one with her a while back at a real estate office down the block, and I think we might have had like 50 or 60 realtors in the room. But I'm talking packed, like, 30, 15, 20. I don't think we've ever presented to less than 10 realtors, which is powerful because, just the numbers game. The more people you touch, the more information you share, the higher chance you're going to get a loan. But John, if you have a copy of that presentation.
I'm trying to pull it up, Scotty. It's not letting me share my screen. I don't know if Randy or Travis can let me share my screen, or.
Yeah, if not, I'm sure we can email it out and share it to everybody.
Yeah, that's true too.
But
yeah, what I liked about it, Scott, is they basically changed the color format from the Angel Oak blue colors that we've used on it to really.
I think I might be able to share mine. Let's take a look here. Don't mind John, guys. He's not too tech savvy.
Oh, whoa. There's another one. Pop up.
He's not much anything savvy, but
we said we were going to keep it light.
Oh wait, Randy just texted me. Randy,
can you guys see that?
Yep.
You guys can see that? All right, so here you go, guys. So this is actually really right. As you can see, right in PowerPoint, but they edited it with their logo. Realtors Untapped Market, non-QM. And then you can see, so this deck comes in Angel Oak colors, but you can see they basically made everything orange, which is their color scheme with their logo. And they decided to just watermark their logo on the bottom. You could also add, your picture, your contact information on every screen. But, if you guys have some time, just go into the portal. You can get with myself or Carlos or your AE, and we'll show you how to get there and find it. And, I think it's, maybe 30 minutes of your time pretty well invested, where you could go in here and customize this thing. And now you have a deck set up to go out and hit the town with and really present to a wide range of referral sources. And you can see it's pretty graphic. It's got a lot of great data. If I wanted to adjust this here, I can just come in here, delete that, add a line. I can do whatever I want, 100% fully customizable. So definitely recommend it. Like I said, I've done a bunch of presentations for these guys at Premier using this exact deck. And then at the end, they finished up with all their contact information. This is my buddy Jordan that sent me over this particular copy.
Yeah, and the great thing about Scott and Carlos, they don't go there telling them who they are, basically. They're just one of your investors. And one of the stats I have up here on my wall is, 9% of the bank statement loans we close, 9% are actually for real estate.
Realtors, yep.
Yeah. So you get more than 12 in a room, you're probably going to get one of their loans. I know we're getting close to the half hour.
John, we cannot go without talking about our brand new 1-year self-employed program.
Oh, go ahead.
Carlos, take it away, Carlos.
That's why he's here.
Take it away, Carlos.
So, ladies and gentlemen, no. So I think I've been getting a bunch of calls about that as soon as our marketing team sent that out, and there's been a big void or big need for a good loan for a good customer or a great customer that just doesn't have that full 2 years of official self-employment, or your business hasn't been open officially for 2 years, but you've been a truck driver for the last 10 years, W-2 in the same line of work, and your tax preparer said you're making way too much money. Congratulations. You got to open up your own company. You went on your own, but you approached all these investors that required 2 years. So starting, I guess, last week, we are now able to use 1 year self-employment of your business. Now, we do have to show some continuation, at least for 2 years. So not a long time, right? I think Freddie Mac is like 5 years or something. And so all we require is technically 1 year. And we can do that on a bank statement program. It doesn't have to be full doc. It's a bank statement program. So think about that. Just give me 12 months bank statements of a brand new year-old business, and you can get a loan. So I think it's a fantastic. My phone hasn't stopped ringing. Like you said, Scott, that's a great program.
Yeah, so because we've always been able to do, like when you had the Schedule C borrower, right? The handyman or mechanic or painter, right? That was always a painter or a handyman and did it as a Schedule C, and then he decided to incorporate, a year ago. We've done those before. That's an exception that we commonly do, because we can clearly see that the deposits are coming from the same sources for those 2 years. But what we couldn't do is, and I think a doctor is a good example, right? Doctor's been practicing at the hospital for years on a W-2, but then decided to go open up his own practice. That practice is open 18 months. Nobody's going to do a loan for that doctor. We can now, using the business bank statements. So you're in the same line of work. You just opened up your business. As long as it's been open up for 1 year, minimum 1 year, and we can verify that on Sunbiz, obviously. Doesn't have to be 2 years, just 1 year. We can do a 12-month bank statement loan for that borrower. So for you guys on this call, that's a huge niche if you think about it. Who else offers that? Where else can you market, hey, if your business has only been open a year, I can get a loan done for you? I think that's a big one.
Yeah, I've been reaching out to my accountants and tax preparer friends, and put me in contact, put me in front of all those customers of yours. You're doing what now? It's tax season. They're trying to buy a house, and eventually they're going to talk to you. Hey, what can I do? Do you know anybody? I absolutely do. So, and I think it goes back to
that's big. CPAs, you're right.
Yeah, about marketing that and marketing to CPAs, accountants. We can help you with that and show you kind of, remember, and we were talking about it offline a couple of days ago. We've been in this business for so long, and we have so many different brokers who are successful, and we kind of know what a lot of these superstars do. And so it's a great, I think we're a great source of information and how-tos that sometimes I'm surprised that some of my LOs don't ask or don't think to ask, because I'm like, man, I can help you so much. And I can give you, I won't give you names, but I'll tell you, hey, these are what my top teams are doing. This is how they're doing it. This is how they're going. Perfect example. When we do these presentations for realtors, if we go and we say, hey, Mr. Realtor, come to a presentation that the loan officer is doing. We're going to talk about convention or whatever. A lot of loan office realtors are like, oh God, I heard it. FHA. I know, same story. I've sat on 3 of these this week. But what my top guys do is say, we're not going to talk about that. We'll talk about that if you want, but we're going to show you how you can pull more listings, close more listings, and more sales using my non-QM programs for self-employed. A person that doesn't have their tax returns, where they should, maybe they had a BK, maybe they had this. You've heard about FHA, fantastic. We're not talking about that thing. And I think just that instantly, like you said, John, perks up their ears and makes them, it shows up to these presentations or these Zooms with us.
John, why do you always say Carlos has bad ideas or no ideas?
I've got to stop saying it because, but it is true. It's, if I was an LO and had Scott or Carlos as an AE for me, Carlos is right. I mean, they see guys who are crushing it. They see guys who are just good. And then, they see that, and they know the tips and tricks to get you more business. And we've talked about the fastest growing segment of the industry are self-employed borrowers. And,
I think Carlos dropped the gem with that CPA, just really just dawned on me when you said it. I mean, think about that. How many CPAs, they know for the most part that a self-employed, a business owner that might be their client can't get a mortgage unless they have 2 years. But man, if you could go into a CPA and say, no, that's not the case anymore. I can do it for you with 1 year of self-employed. That'd be a great referral source.
Get them on the Zoom. I've had some that I've done. The agent said, hey, just give me 10 minutes of your time. I know you're very busy. It's tax season. 10 minutes. Let's do a quick Zoom. Let me sell you my deck. It's going to really help your customer base, right? Your clients. And they're going to make sure that they refer other people to you because you're their chosen go-to CPA. Well, you're helping them. You're like a consultant on taxes and a consultant on mortgages in a way. And then what a great opportunity you have there to kind of
just
market.
To share with everyone here too, how Florida is outpacing the U.S. for self-employed new business applications. So 2020, they increased over 2019 by 27%. 2021 increased over 2020 by 27%. 2022 was flat, and 2023 was a 9% increase of new business applications for the state of Florida. That's just the state of Florida, which is outpacing the U.S. So,
you're a red state, right?
oh, here we go.
Everybody's an entrepreneur. Everybody's an entrepreneur in South Florida.
That goes to show you, over 600,000 new businesses a year for the last 4 years.
Yep, the numbers show it.
I think you said it's a bigger market than USDA or VA or something, John. I know.
VA,
Massive, and a lot of people just don't talk to these borrowers because they're afraid. Because they're like, oh, FHA conventional. That's kind of all I feel comfortable with. I'm like, great. Let us help you. Bring Scott with you. He's going to show you the entire playbook, and all you got to do is put it to work, and you're going to get so much business that you're going to have to hire a team. Like a lot of my guys are like, man, I don't even touch a 1003 anymore or whatever. I just got my team doing it because all I'm out there is just talking to people. And I told him a long time ago, I saw him at the trade show, and he's not here. I'm going to complain. But anyway, he was like, I remember you telling me this a couple years ago. You're not a chef, right? You're like a fisherman. And I'm like, dude, you're good out there fishing, bringing in deals, but you can't be cooking or cleaning your catch. That's for somebody else to do. You got to be out there, and let me help you do that. And again, he saw me at the trade show and reminded me, and that's what he's fantastic. He does a lot of work like that, close a lot of loans like that.
Yeah, and I think we started this call with, feeling pretty optimistic about 2024. And I think, not just the trade show in Miami, Carlos, was probably one of the best foot traffic that we've seen at a trade show in a long time. But other parts of the country, of other AEs and other regionals we've talked with, have seen the same thing. So I think, you dust yourself off 2024, put on the big boy shoes, and let's market yourself. And Scott showed you what one of his customers, how they branded this for their realtor presentation. The other very underutilized part of our website is our marketing portal, where we have flyers for CPAs, what Carlos and Scott have been referring to. Why not just try it? Everyone's got to do their taxes in the next 60 days. So why not just try it? So
what's it cost for that, John?
Yeah,
what does it cost for that for the flyers?
To do a flyer, zero. So
sure.
Yeah, no, and they're great. It's a great resource, and we have a webinar this week on Thursday at 1 p.m. Eastern time. So we'll show the portal. We'll go through highlights of all the programs and again enhancements that we talked about. But I mean, obviously you guys have two gem of account executives there in Florida that are worth their weight in gold, and you really should access their brain power and their marketing skills that they do have, because as little as I try to admit it, Carlos does have a lot of great ideas. So He does, and that's what came. This came about of a conversation with Carlos. So you are getting the recognition, Carlos. So
and by the way, another text: non-warrantable condos. Scotty and I are down here in this market. We do a lot of non-warrantable condos. 10% deductible. I know Fannie says 10%, or you can't go more than 5 or whatever. We're okay with 10. And again, litigation, and they have a rec lease, and it's a 55 and over community. We do so much condo business, that I would always say, don't turn those condo deals away, or don't be shy about taking if you're also, some LOs are also agents. Don't be too scared about taking a listing that may have litigation. Give us a call. We again, number 2 on my list, 3 on my list. Those non-warrantable condos, we just crush them. So
I had a feeling 30 minutes wasn't going to be enough for us tonight. And then we don't even have Leslie on here who goes on for
Land the plane.
Yeah.
Land the plane, Rud.
And that's why it kind of came to my head. 30 minutes was enough, because Carlos is 100% right. We can't not talk about non-warrantable condos, because it's such a huge part of the market. And to add on to what Carlos said, so the non-warrantable condos, guys, we do it on every program, because I get that question a lot. Hey, what's the max LTV on your non-warrantable condo program? Right. So we don't look at it as a program, guys. We just look at it as a property type. That property type is allowed on every program we offer. So it could be bank statements, DSCR, it could be full doc, it could be asset deplete. I mean, it could be any of those products, and we allow a non-warrantable condo on that program. So if it's a primary and it's a non-warrantable condo, it might be able to go up to 90% LTV on a purchase of a primary, depending on what is making the condo non-warrantable. And to that point, as Carlos mentioned, the biggest ones I'm seeing, 10% deductible on insurance that Carlos mentioned, we allow that. 15% deductible on windstorm, on hurricane, we allow that. Sure. And then obviously inspections are the other big one right now. Most buildings are not meeting inspections. We don't even ask about inspections. We're not concerned with them on the non-warrantable condo side. The statistic I pulled the other day, John, blew my mind. 78% of the projects in Florida are considered non-warrantable. Okay, so let's break that down. If you're an LO, you get a contract on your desk for a condo, there's a 78% chance that condo does not qualify conventionally. Think about that. So where should your first call probably be? Unfortunately, I'm seeing too many, and Carlos, I'm sure, is seeing them, too many loans that are getting sent conventionally that are condos, and they don't find out until later in the process when the insurance comes in or when the questionnaire comes back that it's non-warrantable. So now you've got a buyer that thought they were getting this conventional rate, and now you're having to move that to non-QM to be able to get them a loan. And now obviously the non-QM rate's going to be a little bit higher. That just looks bad to the borrower, right? So it's probably better to start non-QM. And then if you come to find out in the process, oh, wait, this does qualify conventionally, then you could always go that route. But more than likely, the percentages say that's not going to be the case. It's going to be a non-warrantable condo.
Good stuff. Good stuff. Maybe, just another idea that I came up with that used to be Carlos's, but but maybe we need to do just one of these just for the state of Florida and non-warrantables.
Yeah. Scott and I'll take it. What do you think? We'll do a condo training. Yeah. We'll show our condo questionnaire, our process, and all that. And I think, again, it's shame on me. I don't really market it that much in a sense, because I just think, well, whatever. But no, it is a huge void in the market now that a lot of people are great buyers, great customers, fully documented income. I mean, amazing customers, just the type of property they want. And remember, there's very little inventory here. So it's not like, condos are kind of the more affordable option sometimes. And we got to have a solution for that customer. Yeah. And I think we got a great, my opinion, because I know the other competitors, and I think we have a great program. I would challenge you to compare our requirements to theirs, and I think you'll be pleasantly surprised.
Carlos, I think you even said at one time, what if what if an LO knew that one complex was non-warrantable? Why wouldn't you market yourself to those realtors that are listing in that project, right? And you mentioned also, Carlos, I mean, I don't even know why I'm here. You know everything. So, but affordability.
Travis is understanding everything to say.
But but this is, affordability is a huge issue, and condos sometimes might be the only way to get into affording, a first-time home buyer even. So, but those are great points.
And a lot of DSCRs as well. When those, if depending on the price point. And by the way, I always say the larger loan amounts for us, we actually, people ask, well, it's a jumbo, whatever. It's great. We actually give you more of a rate incentive for the larger loan amounts. So don't be scared to go after those larger loan amounts. But what I see is a lot of the DSCRs, when they're condos, they're smaller condos, right? That maybe the insurances are up to date, and you're losing that opportunity to repeat. Today I spoke to one of my brokers, and we're looking at doing 4 at the same time in the same building. They're small loans, maybe 150,000, but that's not the point. The point is that another realtor is looking at my loan officer like, where have you been? I didn't know. I thought that they couldn't get financing because of this. And now you bring that realtor into the fold. Now they become your partner for not only that, but also Fannie, Freddie, and all the other stuff. There's no need to go shopping around. When I see realtors calling, I got an FHA person, I got a condo person, I got an IQM person. I'm like, why? Just make one call. Just be with an expert. So I think you can use this program.
Well, a lot of thing about you guys and your experience, you can be that first call as an account executive because if you can't do it, where they should go, right? That's a huge.
We tell them all the time, hey, you should go here, and they're like,
right.
What? I'm like, why wouldn't I help you close a loan? I can't close it. I mean, you're gonna bring me another one tomorrow, and that works more often than you think. So yeah, absolutely, absolutely.
All right. Well, I don't see any more questions coming in, but I think, the couple ideas maybe we have out of this, guys, maybe just do a non-warrantable one day and run with that, I think. But, for the first one, I appreciate everyone who came on the call and,
Thank you, guys.
Questions. Really appreciate it. Carlos and Scotty, love the expertise and the professionalism that you guys do bring day in, day out. And
professionalism, I appreciate that. Thanks.
It's an honor to work with you guys, and your clients obviously should be really pleased that you guys are the best in the business. So, but no more questions. You guys know where to reach Carlos, where to reach Scott, myself. Let us help you grow your 2024 business. Really, we'll roll the sleeves up and get it done with.